Hello, this is the Chart Profit video, 21st of September, we're about an hour into the trading day. This from the pre-open today. This is the E-mini S&P. Just a quick review. We had on Monday this week aggressive selling marked here. This red bottom low on the profile. In the short term, this is usually a negative, and about 80% of the time that low would be tested the following day. It wasn't in this case, and in fact the market reversed very quickly. On Tuesday we had a higher value area. You'll also notice on the Monday that the value area was pretty much overlapping Fridays and Thursdays, an indication that that selling on the short time frame was not effective. And I did make the point up here on Tuesday pre-open, and in the longer time frame the selling here was actually reactive, as it had been marked above the point of control at 28.58.50 down here, which was the local controlling price. So the odds were telling us that actually just on the day frame we'd see a lower day on Tuesday, but we didn't. And that is rare, and when a red at bottom day gets reversed that quickly, it's usually a sign actually in the longer term that there's strength in this market. We had an overlapping or sort of inside value area on the Wednesday, and we've gapped higher on the Thursday, with aggressive selling being marked up here, the green at top. Even on the very minor time frame, our first level support at 28.93, which is the really minor controlling price, comes in here, which was almost the low of the day. So from this perspective, the market finding support at the first available level and then quickly reversing, indicating strength. Just looking at the pulse chart, we've noted this ongoing negative divergence between price at the top here, which has been moving higher obviously, and the price momentum chart at the bottom, which has given us at the start of September a lower high. This negative divergence was confirmed when the indicator turned down just about here. The indicator has a strong tendency to return to zero when we see that, but again it has actually turned back up on Thursday. Since early July here, the indicator has been above zero, which is trend up, and the momentum, as I've just said, has turned back up, and we have a pretty solid green bar in the middle here for breadth. Just a little bit of neutral in here, but pretty solid bar since middle of August, early August here. So just as a snapshot, or what I call the pulse chart of the S&P, apart from that negative divergence that we saw, which may have already played out, there's not too much to worry about on this chart, and we've got green coming back in on the minor time frame. All the indications are this is a pretty resilient market at the moment. Okay, this is the spider. Blue line here represents the old high. This line here was the 30-day controlling price, and we saw a higher low above that level. This week that controlling price has moved up to 289.77. Here that's now first level support. Spider out at a new high this week. IWM, the Russell 2000 ETF. First level support 167.60. That's the 8-month controlling price. Now we look at the lagging charts. This is the UK's FTSE 100. Large cap index, the pound, is taking a bit of a battering today, so that's helping the large cap UK stocks in this index higher, so we're having a very good day on the FTSE, but the resistance is here, the 3-year at 75.20. Now if we see time printed above that level, that's a real positive for the FTSE. For the minute though, 75.20 is the resistance on this chart. The German DAX had a strong rally back this week. The major controlling price is here, 12,450, and the DAX has actually probed this level just today. Again, price up here above that point would be a positive. If we see the FTSE and the DAX moving into a stronger position, that would look better for Europe. Probably just a general indication of strength for global equities. So we'll monitor price action around those two levels going into next week quite closely. Let's take a quick look at the sentiment indicators, most of which are kind of neutral at the moment. This one, as we know, the RIDEX assets ratio, on my version of that indicator, peaked at 27.55 just 9 days ago here, and that equaled the highest ratio in the database which we saw earlier in the year, which coincided with the market top at that point, or rather that high in the market at that point. So from 27.55 down to below 19 in just a few days following that peak reading, just as the market corrected over a few days here, and then into that little rally back. And as the market rallied, this fell quite quickly, which, as I said at the time, in the short term actually isn't a bearish indication. And as the market's broken out, we're actually still around the 21 level. Just the fact the indicator equaled its all-time high at this point is definitely something to pay attention to. But as I mentioned, there's nothing too alarming in any of the other indicators that we follow, like this one here, the Lipper US fund flows indicated they reported equity funds, including ETF inflows, just under $1 billion this week to the 19th of September. And the 4-week net flow is at a negative, that's here in black, a negative $6 billion. And if we look at the public poll from AAII, bulls and bears actually this week at 32%. And in the Investors Intelligence poll, bulls percent slightly higher at 59%. And bears percent just seems to be stuck around the 18% level for at least 3 months. So it's really just that Ridex indicator which caused some concern when it peaked 9 days ago. As I mentioned, as the market has rallied back, it's fallen off, which in the short term is usually a bullish indicator. Okay, this is bonds. This is TLT, the T-bond ETF, fallen sharply over the last 3 weeks and is in fact probed almost as low as the May low this week. And bonds here remain in a really weak position below the 6-month, 118.50. And the warning sign came when we broke back below the major up here at 121. Bonds look to be doing okay. There was some time printed above that level back in August, and just the turn up there would have given us a higher low above that level, but we didn't see it. Instead we saw a pretty swift decline. First sign of strength would be time printed back above 118.50. Within the last few videos we've talked at length about GLD, the gold ETF, how despite the sentiment readings and the oversold nature of the chart, not convinced about upside for gold just yet, primarily because it's spending too much time down here below the major value area low at 114.50. Usually when you see these major value area lows tested, if we're still within that developing distribution, you'd see a pretty quick recovery, and we haven't seen that, which suggests that we could be into something new here in terms of a large distribution. And as the recent trend, when it broke below its major here, has been down, raises the possibility that developing distribution is in fact coming lower. A couple of things that could raise the likelihood of gold rallying back here would be, number one, this major at 121 actually migrating lower. That would take time, down here somewhere possibly, and then price above that level would really change the picture for me, or some convincing evidence that the dollar was going to head lower. So we'll look at that. So here's some supporting evidence that suggests that could be the case. We've got the dollar index here printing back this week below its major at 94.80, which remains at that level. If the dollar is strong against its basket of currencies in this index, you'd see the dollar index printing some time back above 94.80. So actually the dollar is in a weak position on this chart. So how does it look against the euro? Well, this week we've seen the chart probe a little just today actually above its 1 year resistance at 117.55, currently printing very close to that level. Time above that point would be an indication of strength for the euro versus the dollar, and again support dollar weakness. Can't make that assumption just yet on this chart, nor against the pound. The major level on the pound dollar is at 132. We did see a probe above that point on Thursday. Pound has pretty swiftly reversed, and we're printing, I think, the low of the week currently down below 131. Time above 132 would be an indication of weakness again for the dollar. And the dollar yen is actually in a strong position above 111.30, which is the major. Just look at a longer term weekly chart over the last 6 years, you can see that we've reached the natural resistance point, the halfway of 2015 high to the subsequent low. So we can say that time or price printing time above the July high here would be pretty bullish for this chart. So back to dailies, we're at that resistance right now. So that concludes, and once again I thank you for watching.